Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. The chips are down for Asian equities after a sell-off on Wall Street driven by Nvidia's underwhelming results. Sentiment being further sapped by Donald Trump's latest comments on tariffs. The U.S. president says 25% levies on Canada and Mexico will take effect next week, with Chinese imports also hit by an extra 10% tariffs. And just 2 days ahead of Phase 1 expiring, Egypt says Israel and Hamas have begun negotiations on the second phase of the Gaza ceasefire. It has just gone 8 a.m. across the Emirates. I'm Rachana Mehta in Dubai. Well, it is a mega day for market moves. Take a look behind me. There is a sea of red behind me. The handover from Wall Street, very negative into the close yesterday. And actually, just to point out, the S&P now is actually tracking negative for the year. NASDAQ down more than 3% year to date. So all of the gains of 2025 have been wiped out throughout the course of the last couple of days. What are the drivers? Well, further tariff talk. President Trump yesterday saying that those tariffs on Canada and Mexico are actually due to go into effect on March the 4th. So we'll see whether a reprieve comes in the next couple of days. But that's driving sentiment, an extra 10% on China tariffs as well, in addition to the existing 10%. So there's more to come on China. And then we also had the negative price action from Nvidia yesterday. The stock closed down 8.5% after those earnings came through. So that pulled down Magnificent 7 and the NASDAQ as well. This is the picture for futures today, though. Futures for S&P down 0.2, NASDAQ down about 0.3%. Euro stocks futures, European indices also leaning very red this morning, down 1.3%. This after a negative close yesterday. And of course, there the focus is very much also on the potential tariffs that the U.S. are going to apply on European goods. That was the story yesterday. And then take a look at the handover from Asia this morning, down 2%. We have the Nikkei down more than 3%. And we're going to talk more about that shortly as well, as a lot of the tech and the chip-focused names get hit. But let's flip the board, because I just want to give you an idea of how some of the other cross-asset markets that we look at are trading today. 10-year yields down 3.5%. No surprise there, given the risk-off sentiment. 4.22 is where we're at. It wasn't that long ago that we were talking about 4.5% being sort of a point of gravity for the 10-year yield, but we've squarely broken through that over the course of the last few days. Euro tipping weaker as well. We saw some strength in the USD, so that's manifesting against the euro this morning. We are slightly softer, 0.1%. Bitcoin, take a look at the price action there, $80,000, down 5% in trading. We are technically more than in a bear market now, because we are off more than 25% from those recent highs. So Bitcoin just breaking through $80,000 to the downside. And then even gold is coming off too, which is surprising given the geopolitical concerns and everything else that we're talking about, risk off. You would typically see money going into gold, but not today. We're actually seeing a bit of a pullback. So yes, a lot of red on screen. Let's also dive into how some of these markets in Asia are faring. Avril, I was just talking about the very weak handover that we're getting from these Asia-Pacific stocks today.
Incredibly dismal performance, Jumana. I mean, you look at the losses on the Japanese, South Korean benchmarks. They are accelerating well past the 3% level. And today, as you say, the drivers are really about how Nvidia continues to dent sentiment. And then Trump talking about these March 4th tariffs being a go on Canada, Mexico, China. That is really what is sapping appetite for risk assets, particularly the chip stocks. Those are what are proving to be painful points for not just some of these Japanese indices, especially given Taiwan being shut today, but also tech. That is the drag on the Hang Seng today. What is also really interesting, if you look at the region's benchmark and its performance against the Hang Seng Tech, they are both headed for their first weekly loss in 7 weeks. So it tells you how important Chinese tech has been as a driver for the region. Flip the board again. Today, as I say, it's also about Trump and the dollar's resurgence. That's played out in EM Asia. We saw in the past hour or so the stock benchmarks of both Indonesia, Thailand slipping into a bear market. The rupiah also 5-year lows. Korean won, the big decliner today, maybe exacerbated by stock market outflows as well.
Yeah, a bit of a perfect storm for Friday trading, Avril. You got the tariffs on one hand and then those concerns around the chip stocks on the other. Thank you for the overview. Now, President Trump says 25% tariffs on Canada and Mexico are on track to take effect on March the 4th. He's also set to impose an additional 10% tax on Chinese imports on the same day. For more, let's bring in China correspondent Minmin Lo. Minmin, it doesn't appear as though there is a reprieve in sight, but of course there's still a couple of days between now and March the 4th. What do we know about this latest round of tariff proposals?
That's right. So a Trump official had said that the administration is open to striking a trade deal before March 4th, but you said it's really less than a week until then, so not sure how things will turn around by that time. But President Trump is going to go ahead with the levies on Mexico and Canada, 25%, and he's also going to add this 10% tariffs on China. That's on top of the pre-existing 10% that had already kicked in on February 4th. So the new tariffs kick in 1 month later on March 4th. The pretext here, again, is about the drugs entering the U.S. Despite the 1 month grace period given to Mexico and Canada, despite these two countries taking measures to beef up border security in Mexico, even extraditing over about 29 of these accused drug traffickers to face charges in the U.S. in order to meet Trump's conditions to avoid those tariffs. Despite all of that, Trump is going ahead to keep those tariffs with the rates unchanged, and that raises the question of whether Trump was actually sincere in negotiating on good faith here. When it comes to China, he says that the precursor chemicals are still coming from China, and the immediate impact, of course, you're seeing that show up in the currencies, the Mexican peso, the Chinese yuan, the Canadian loonie, all sliding on the back of this news. And then, of course, the Chinese equities, look at the Hang Seng closing 2% just before the lunch break, and Bloomberg Economics was saying that the new tariffs is equivalent to about double the size of the trade war in the first round, and it could cut China's exports to the U.S. by about 50%.
Okay, that's an interesting data point. But it's not just about the tariffs, but also about the potential retaliation as well. On China specifically, I've noted that President Xi has taken a rather measured approach. He hasn't talked about a significant retaliatory step. He doesn't look like he wants to add a fuel to the fire at this point. What do we know about how China could respond and whether they actually do want to go down the line of retaliation?
Yeah, so he has previously held a meeting in Beijing where he urged officials to remain calm and composed. And recently, the Chinese Commerce Minister Wang Wentao did write a letter to the new U.S. trade representative opposing the 10% tariffs, but it wasn't clear whether he was referring to the first round of the 10% or the second round. But the letter said that China had already taken countermeasures, so I believe he's referring to the first round of 10% tariffs because we know China has retaliated with these levies on U.S. oil, LNG, and agricultural machinery. As far as I know, China has not yet taken countermeasures against the second round of tariffs. And if the February tariffs was anything to go by, China might retaliate on the day the tariffs kick in on March 4th, about 1 p.m. Beijing time. That might be when we could see China announce this slew of measures. So we'll have to wait for that. It happens on the first day of the two sessions that kick off next week in China as well. So it's going to be a packed agenda next week. And of course, we're awaiting that call between President Trump and Xi that was supposed to happen as soon as possible, but still nobody has picked up the phone yet.
Yeah, we'll see what happens the next couple of days. Bloomberg's Minmin Lo, thanks for the reporting. All right, to discuss the market moves and more is Brett McGonegal, CEO of Capital Link. Busy day to have you with us on the show. Let me just start off by asking you whether you think markets were just too complacent about tariff risks.
I think they were too complacent, but I think what's going on here is people are not understanding the gravity of what's moving Trump and the next wave of what's happening. So I often talk about, like, if you're going to buy a house and remodel it, you can buy the house, paint the fence, or paint the outside, right? That's the normal transfer of power. Maybe you put a new roof on, and then you start to think about a bathroom or a kitchen. Right, so we're like way past bathroom and kitchen remodeling here. We're talking about support beams coming down. Like, where does this wall, does it need to be here? If it doesn't, let's take it out and let's figure out a new way to remake
literally
it.
Burning down the house.
Yes, yes.
Okay.
So this is a complete remodel. It's a gut renovation, and what I think people need to spend more time thinking about is, what's the end goal here? there's so much noise every day, right? And everyone's getting caught in the noise, and you're going to get this massive amount of chop from here for the next 3 or 4 months until I think people start to realize this is taking the conventional government norm down to the studs and completely rebuilding.
How is that positive for risk in the time it takes, to use your analogy, to rebuild the house?
So the risk factor is, look, risk is a function of sentiment. It's emotional, in my opinion. So right now you're getting really like raw emotion in the market. People don't understand why this thing isn't happening the way it's supposed to. Every day something's changing. That's part of the Trump narrative, and that's part of how he builds consensus or figures out where consensus is and then comes back and then goes to win a leverage game. So without chaos, there's no way to really find his middle ground.
Yeah.
So the risk factor is risk is also a function of two things, time and price, right? We're not there time-wise and we're not there price-wise.
Yeah.
So I think you're going to come in, the market will come in more because it's uncertain. And at some point, we're going to look and say, oh my God, the second this next bull market started and we missed it.
Yeah.
So,
timing is everything in that. And as you say, the price. And we're starting from the starting point for Trump's second term. His valuations are a lot richer than they were in his first term. So it was going to be more difficult to sustain this bullish market. But at the same time, you have whatever's going on with Nvidia, and you have the pullback in Nvidia, the knock-on effects to Magnificent Seven as well. So how do you square the two things up? Or are both of them going to be dragging on sentiment?
They're going to both drag. And what happens is you've had a masking effect. You've had 7 stocks that have masked a malaise in the market globally. And it didn't matter because their weighting is so high that if you play the game, which is any risk off, you just go into the safe names, you continue to mask the market higher, right? It's a phenomenon the market's never seen before. 7 stocks that everyone hides in, even in fear, keep going up because everyone's piling into the same stocks. Now you have this kind of deep sea moment where that conventional norm is being challenged. But I question that in a big way, and I say if you're looking at the space, Nvidia is maybe a little bit different because they're the pick and axe play. But commodity pricing is not a new thing in technology. It always happens. So we're at that moment. We're at that moment now where everyone that's utilizing AI has now found it much cheaper, it much easier. And maybe the GPU side for Nvidia is being challenged, but I don't really think it is. The action in Nvidia yesterday, it's not. I'm not fearful of it. I think the stock has been, the darling for a year. I mean, it's okay for it to pull back.
Yeah.
I would think if we're 6 months from now and people are saying you could buy Nvidia at 120 and you could have done it, those who didn't are going to really regret it.
Okay. So then how do you play this uncertainty in the near term? Are you going into safe havens? Are you buying fixed income?
No. So the fixed income play, I think, is extremely important right now. I mean, you said it just before we came on. 450 was the floor. People worried about 5. Now we're at 425. Look, there's only been one game in town for a long time. It's the equity market, right? The bond market has become just as volatile as the equity market. So I'm not really sure that's the play. And if you think about tariffs and if you think about all the money that's going to, potentially be added to the market, I'm not really sure that that's the right play. I think you have to kind of stick to the names that are working. Meta is obviously the benefactor of the AI price war, and it's showing, right? If you look at a proxy of the market, I would say Bitcoin and maybe Tesla were the proxy, from Trump day one to now. Yeah. If you overlay the charts, they're identical. Yeah. They're down 25, 30%.
Exactly.
Right? Yeah. So the highlight names are suffering right now. The best thing that can happen in the market is you get some broadening out from those 7 names to 25 or 30, and then you set a baseline foundation for the next rally. And I think we're going to see that happen.
Okay, yeah, that's a good place to leave it. Thank you for sharing your views with us on the House as well. Brett McGonegal, CEO of Capital Link. All right, coming up, negotiations on the second phase of the Gaza ceasefire start in Cairo. We look at the likelihood of the truce being extended. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersechi in Dubai. Egypt says negotiations between Israel and Hamas on the next phase of the Gaza ceasefire have started in Cairo. Egyptian state media say officials from Israel, Qatar and the United States began what it described as, quote, intensive discussions. Meanwhile, Israel says it will not withdraw from a strategic corridor along Gaza's southern border, a move that could complicate negotiations. So joining us now is Honor Ant, Managing Editor for Middle East and North Africa. First of all, let me just start off by asking you, remind us what the transition from Phase 1 to Phase 2 actually does entail.
Phase 1, what we call Phase 1, is about to expire in just a few days, Jumana. And what the Phase 1 entailed was basically release of a certain number of hostages, which already took place on 9 different occasions. And Phase 2 would entail release of further hostages held by Hamas in return for Israel releasing another number of Palestinian prisoners held in Israel right now. And during that period, both sides, through mediators, will talk about how to bring a permanent, lasting end to fighting, to cessation of hostilities. But we're not there yet. So what's happening right now is that the sides are talking about a possible extension to Phase 1, during which all the remaining hostages, which are thought to be around just about 60, and Israeli authorities believe about 24 of them are probably alive. So Israel wants to get all of them returned back to Israel, and then in return it would again release hundreds, if not thousands, of Palestinian prisoners from Israeli.
So yesterday we were reporting that it seems as though Israeli troops are positioning once again at the border. Today, there are reports that Israel wants to maintain a presence along the Philadelphia corridor. Does this mean that the likelihood of a resumption in fighting is higher once the hostages have been released?
I think it's a fair assessment. It's definitely possible. I'm not sure if we can say it's higher than it was, let's say, 2-3 weeks ago. But Israeli Defense Minister Katz made it very clear yesterday during a speech to basically regional officials in Israel that Israel will not withdraw from the corridor that you just mentioned, because they have, or they say they have, uncovered various tunnels that they say Hamas has been using to smuggle various things, including arms and ammunition, even during the ceasefire. Now, it's impossible for us to verify that, but at least that's what the Israeli standpoint is at this point. And that means that, yes, a cessation of hostilities is not guaranteed, and there is a possibility that after the first phase or the second phase or the extended first phase, Israel might go back to war, and they have said as such very openly.
Very important question about future governance. I think it was a couple of weeks ago where one of the Hamas spokesperson was on Al Arabiya, local channel, and they suggested the possibility of stepping down and no longer assuming administrative capabilities in the Gaza Strip. Do we know what those discussions are looking like right now in the future of Hamas?
So this is one of the sticking points that separate the two sides, Israel and Hamas, when they try to negotiate a full permanent peace. Yes, Hamas said that it doesn't have to take place in administrative roles once the peace is achieved, but that is not going to be enough for Israeli authorities. They fear that this can be a tactic where Hamas sort of pretends to take a step back while it keeps an armed force inside Gaza. And in other words, it turns into another Hezbollah right outside Israeli borders. So it's not really going to be a solution to the problems.
Yeah, interesting. Honor Ant, Managing Editor for Middle East and North Africa. Thank you very much. Now, coming up, President Trump sidesteps pressure to agree on security guarantees for Ukraine during a visit by UK Prime Minister Keir Starmer. Details from the pair's joint press conference next. This is Bloomberg. UK Prime Minister Keir Starmer has met with Donald Trump in his first face-to-face meeting with the US president since he returned to the White House. During a joint press conference, Trump expressed eagerness to conduct a trade deal, but Starmer fell short of his ultimate objective of winning U.S. security guarantees for Ukraine. The meeting comes ahead of Ukrainian leader Volodymyr Zelensky's visit to the U.S. later Friday. Joining us now to discuss is Bloomberg senior reporter Henry Meyer. Henry, so many world leaders have been paying visits to the White House to visit President Trump. Let me just ask you, in light of the upcoming visit of Ukrainian President Zelensky to the White House as well, how has Starmer's visit helped push forward the discussions around a potential peace deal between Ukraine and Russia, knowing that he wasn't able to extract any U.S. concessions on security guarantees?
Look, I think that the meeting itself, which by all accounts went well, it's important that European countries like the UK are able to build bridges with the new Trump administration. Yes, it is true that on the issue of the security guarantees that European countries want to get from the US in order to put together a plan for a peacekeeping force that would monitor any ceasefire in Ukraine. The US is dead set against that. And, I think that ultimately the U.S. could be persuaded to provide some logistical support, some reconnaissance for such a mission, but there's clearly reluctance to provide any kind of guarantee that the U.S. would intervene if those forces came under attack. And I think that's not going to change. However, I think there is still a chance of something coming together.
Yeah, well, the UK, the Prime Minister Starmer this week announced that they were going to be stepping up their own defense spending. What about the EU? If the EU step up with their own defense spending, will that be sufficient to protect Ukraine?
It's clearly Europe has taken the decision that it's got to ramp up defense spending. Yes, you mentioned the UK decision there. They reallocated funds from international aid to boost their defense spending to 2.5% of GDP. And the EU is now also looking at ways to reallocate funding in order to free up, potentially hundreds of billions of euros. But of course, the US cannot be replaced. The industrial base that the US has is critical here. But, I think Trump is looking for Europe to play a much bigger part, and clearly that is what is going to happen. So this is an important development.
Henry Meyer, Bloomberg's the senior reporter. Thank you so much for the latest reporting. All right, a quick look at equity futures, simply because it is a massive risk-off day today, and market sentiment has turned very south in the last 24 hours. Lots of red on the screen, mostly led by European stocks down 1.2%. When we come back, we're going to be talking about AI in Saudi Arabia. That's next. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. The chips are down for Asian equities after a sell-off on Wall Street, driven by Nvidia's underwhelming results. Sentiment being further sapped by Donald Trump's latest comments on tariffs. The U.S. president says 25% levies on Canada and Mexico will take effect next week, with Chinese imports hit by an extra 10% tariffs. And just 2 days ahead of Phase 1 expiring, Egypt says Israel and Hamas have begun negotiations on the second phase of the Gaza ceasefire. It's just gone 8:30 a.m. across the Emirates. I'm Rachana Mehta in Dubai. Let's get you up to speed on some of these market moves. Well, we do have the U.S. futures tilting towards the green now. This after a negative session yesterday. I highlighted earlier that S&P is now tracking losses for the year. It's switched into negative figures year to date. The Nasdaq down about 3%. And yesterday, the big driver was the pullback in Nvidia. The stock ended the session down 8.5% lower. It pulled down other tech names, other chip makers as well, and that's having knock-on effects into Asia. As you can see, the handover from MSAP, very negative today, down 1.9%. Strong losses, a lot of red on the Nikkei index. We'll talk more about that in just a moment. But then take a look at European futures as well. A lot of red there, leaning towards a very negative open, down 1%, building on yesterday's losses of 1% as well. Switching over, though, this is the picture across other assets. U.S. Treasuries continue their march lower. We're about 3 basis points lower today, 4.22. too, given the risk-off sentiment that's prevailing. So money is going into fixed income. Euro also trading slightly on the back foot as the dollar gets a bid from those tariff comments. And then Bitcoin down another 5% today. We are technically more than in a bear correction, down 25% from the most recent highs. So crypto coming under a lot of pressure here. And then gold, surprisingly, pulling back a little bit today, down 0.6% despite the risk-off sentiment. But let's talk more about how some of these markets in Asia are faring. Avril is in our Singapore studio. So just walk us through why we are seeing so much red on these Asian bourses.
Yeah, I mean, for much of this week, it was about tariff confusion. And now that Trump is sort of confirming that we're going to see an extra 10% on China, that's really prompting investors to reprice the tariff risk. And that's why you're seeing not just chip stocks, but other equities in the region lower, including Chinese tech names. That's really the drag. You're seeing the Hang Seng Tech headed for its first weekly loss in 7. And of course, they've been rallying on this idea that DeepSeek can provide a cheaper, maybe better AI model than what's out there from the US. Worth noting that we're since also hearing from Tencent that it's pushing through a new AI model that could rival DeepSeek, although Bloomberg Intelligence seems quite skeptical that it will provide Tencent with earnings upside. So keep that in mind. Flip the board. Of course, the Chinese tech losses today means that the US-China tech decoupling narrative takes a bit of a hit. MLife's Mark Cranfield makes the point that the key test is going to be the performance in the Golden Dragon Index in the US later today. If we see it going into the weekend with only modest losses, then that could mean maybe Chinese tech continue outperforming the region. Jumana.
Interesting, especially as we're beginning to see green shoots of a recovery now in NASDAQ futures. So something to bear in mind. Avril, thank you so much. Avril Hong in Singapore. Well, AI is part of Saudi Arabia's Vision 2030 strategy, which aims to identify new revenue sources as the Gulf state diversifies away from fossil fuels. Its goal is to become a top 15 country in AI by spending the rest of this decade adopting the technology at home and then exporting it from 2030. Joining us now to expand further on the kingdom's plans is Majid AlShehry, spokesperson for the Saudi Data and AI Authority, also known as SDAIA. Good morning to you, Majid. Really good to have you on our show today. Look, I'm just going to start off with a question that I think many viewers also would love to get an answer to, which is exactly what are Saudi Arabia's AI ambitions? What do they encapsulate?
Morning, Jumana. Saudi Arabia is positioning itself as a global leader in AI, and we are leveraging the strategic vision for the country, Vision 2030, to build a complete ecosystem of regulatory framework, economical support system, and achieving what we can do to unlock the potential of the data sets that we have in the government and the country to build a better future for the humanity in the kingdom. And we are demonstrating that by working globally with our partners, whether NGOs, companies, other governments, to achieve really interesting things that we are very proud of so far since the launch of SDAIA in 2019.
Yeah. And is this mostly about the rollout of AI applications that will help improve the quality and efficiency of people's lives? Or is it about spending in the infrastructure around AI, things like data centers or even potentially foraying into chip making?
So as SDAIA, we are having a mandate to build the whole ecosystem of that. So it doesn't mean that we'll do it by ourselves. We are partnering with companies to do many of these things. So if you notice in the past couple of years, we had few big announcements by hybrid scalers or hyperscalers like Microsoft, Google, even Amazon and Oracle. All of them have been already started to build those huge computing and data centers in the kingdom by themselves or maybe through partners in the kingdom. And that's something we really appreciate and we support and encourage. Now, when it comes to the models, we have started our own and we have built Alam, our Arabic large language model, and that's a response from Sadaya, Saudi Arabia, to the movement globally happening right now in advanced countries in AI, including United States, Europe, China. And we have introduced Alam. Alam is an Arabic large language model, and it's really advanced in the Arabic language. That's what we focus on. We are producing the culture of Saudi Arabia, the understanding and the principles and the values of what we believe in Saudi Arabia in our large language model. We have a very rich expertise. We have a very large content in Arabic. Some of them were actually not digitalized. We have digitalized that knowledge to introduce it to the rest of the world as a knowledge worth to be included and embedded in our large language model.
Yeah, really interesting. And one thing I do want to ask you is we reported back in November that Saudi Arabia is working on an AI project called Project Transcendence, and that would have as much of a $100 billion backing. Can you tell us more about that project and how it fits and aligns with Sadaya's ambitions?
So I'm not going to comment on certain projects, especially if we are not the owner of that project. Probably you can check with the entity that announced that project to get the details. However, I can assure you that in 2020, we have released our National Data and AI Strategy. And within that strategy, we have identified certain KPIs by the year 2030. Since then, we have been working very hard to announce a few projects in infrastructure, in investments, and training and building talents and capabilities, and other aspects that are important, very important from our strategy. And we believe that we have already the good environment that will allow, especially from the regulatory frameworks. We have secured our environment by releasing the Personal Data Protection Law to protect the privacy of our people. Also, we have introduced a lot of policies, including the anti-cybercrime law and the freedom of information policies, a very good set of policies. And those sets will definitely support companies that are interested to invest, interested to come into the market, and also introduce their own solutions and innovations.
Yeah, I want to pick up on what you were saying about the Arabic language model, Al-Alam, and also just tie it into what we discovered about DeepSeek about a month ago, and the fact that alternative language models, large language models, can be brought to the market at substantially lower costs. How much of a pivotal moment do you think this was for the world of AI and for the world's understanding of how much it's going to cost to train up some of these models in the future?
Yeah, so we in Saudi Arabia remains committed to advancing the AI development in general, regardless of the external constraints. We believe that having access to GPUs is really valuable, and we are progressing to less dependence on the hardware. We believe with time, our AI engineers, not just in Saudi Arabia, but globally, will be able to utilize the less expensive GPUs to produce something out useful for the humanity. And that's really happening with the models. It started with DeepSeek, but even in the US, the good GPUs now started to optimize their training and the cost of the models. And that's really positive, in my opinion, for the ecosystem and the development of the new and future AI models.
Yeah, lots of people have been talking about it being a democratization moment for some of these language models. Majid, thank you so much for coming on our show today. Majid AlShehry, spokesperson for the Saudi Data and AI Authority. Now for a look at some of the other stories we're following today. Tencent has released its Turbo AI model with a claim that it is faster than DeepSeek's chatbot. The AI service is designed to respond as fast as possible, and Tencent says the deployment cost of the model has also been reduced. The launch underscores the dramatically quickened pace of development since DeepSeek stunned Silicon Valley with its low-cost model a month ago. Meta is said to be in talks with Apollo for a $35 billion financing package to help develop data centers in the U.S. Sources say the alternative asset manager has discussed providing a major part of the financing. KKR is also understood to be part of the investor group. Meta has already spelled out plans to spend as much as $65 billion on projects tied to AI this year. And coming up, we're going to talk more about Saudi Arabia. Saudi real estate is under pressure. We take a look at the state of the residential sector next with Knight Frank. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Staying with Saudi Arabia, let's focus now on real estate. Soaring prices and high borrowing costs are dampening demand for home ownership in the kingdom. A survey from consultancy Knight Frank says that first-time buyer demand slipped to 29% last year compared with 40% in 2023. To discuss this and more, I'm happy to say that Faisal Durrani, who is partner and head of MENA Research at Knight Frank, joins us right now. Good morning to you, Faisal. There are a couple of statistics that really jumped out to me from your report. It's a very long report, by the way. 63% of Saudi nationals owned their home at the end of 2023. Now, the Saudi 2030 vision has penciled in a target of 70%. We're getting close to that 70% target. What does that mean as we get closer to it? Is it likely that we're going to start to see demand leveling off?
Good morning, Jumana. And first of all, thank you very much for having me on your show. I think that's absolutely right. As we get closer to that 70% target, it's only natural that we start to see a decline in demand, particularly from first-time buyers. And in fact, the report that we published this week, the Saudi report, has found that first-time buyer demand has slipped back because about a third of people say they already own a home, and about 40% of people are quite happy with their current living arrangements. And in third place, we've got affordability issues that are creeping in too. And I guess the final point to make on this is that for a lot of first-time buyers, this is the most significant financial transaction of their lives. So the prospect of selling and moving on so quickly after having made it onto the property ladder isn't necessarily front of mind.
Yeah, it seems to me like there's a bit of a wedge between the prices on offer versus the budget that Saudi residents are willing to pay, or even the appetite to buy a house, as you just alluded to now. What could be the knock-on effect on the Saudi real estate market if that gap doesn't narrow?
This is a really good question, because what we found is 40% of buyers are prepared to spend up to 1.5 million riyals on a home, and about half of Saudi nationals still aspire to own a villa. But where prices are today, that delta between buyer expectations and market pricing realities is another factor that is likely to continue dampening demand. And this is where the real crux of the challenge lies, because the bulk of the million or so residential units that we're expecting to be delivered by the end of the decade are likely to be priced above what people can afford.
Yeah. What about bringing in new sources of demand and perhaps loosening some of the laws on foreign ownership? What do you see happening in that space?
I guess this is where the answer lies, is in identifying those new sources of demand, i.e. opening up the market to international buyers. We have been eagerly anticipating a change in the foreign ownership laws, and we have started to see movement in that direction. Last year, we had the introduction of premium residency visas, one of which is connected to property ownership. This year, we saw the decision to allow the investment in real estate through the stock market to gain access to property in the holy cities. And we know through our research that there is an extremely high level of demand from global Muslim high net worth individuals who are keen to access property in cities like Mecca and Medina.
Yeah, they recently relaxed some of the rules around that. We did a report on it on Bloomberg. Let me just ask you as well about financing. And I wonder whether you could start seeing up more financing offers to people who are looking to buy their first home. And as you say, maybe hesitant to make the leap because of anxiety and also just a lack of funding options that are available. Could we start seeing more offers on that front?
I mean, look, the government has done a lot to facilitate that transition from renting to owning. We've had 150,000 families benefit from various government programs and initiatives over the last 2 years alone. And in our research, what we found is more than half of Saudi nationals actually expect developers to offer them some kind of financing. And at the moment, what we see is that perhaps a perception amongst buyers that developers might be able to offer them better rates, because we know interest rates have jumped from 1% to 5% between 2020 and the end of last year. But at the moment, we don't see developers doing that just yet. So that might be part of the solution going forward.
Yeah. Faisal, just to wrap up our discussion, I thought it was really interesting in your report that the bulk of the new homes coming to the market are in the luxury segment. And given everything that we spoke about just now, that feels surprising to me. Is that strategy going to pay off?
You're right. This is where the real challenge lies. And as I said earlier, the only way to really address that is to identify those new sources of demand, because we know through our research that there is an exceptionally high level of interest in the Saudi market from international buyers. But the way they can access this market still remains quite challenging.
Yeah, very clear. Faisal, thank you so much for coming on our show today. Fascinating insights. Faisal Durrani, partner and head of MENA Research at Knight Frank. Now, coming up, Ghana's new president, John Mahama, says the economy is worse off than he expected. More on the significant challenges facing the West African nation next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Ghana's new president says the economy is worse off than he expected after an initial assessment of state-owned agencies' debt. The country faces significant challenges, including surging inflation, poor job prospects, and crushing debt. For more, Bloomberg's Ndiro Ganga joins us now. Ndiro, so interesting to hear these comments coming from the President, John Mahama. He obviously did speak to our colleague Jennifer not so long ago. But now we're really getting insights on how he's viewing the economy. What did we learn?
Hi, Jumana. So the president says that the economy is broken on very many fronts, and he attributes this to high levels of debt, and also he attributes it to poor fiscal management in the country. He says that state-owned enterprises are knee-deep in debt. If you look at ECG, it owes 68 billion cedis. If you look at Cocoa Board, it owes 32.5, and it failed to supply 333,767 tons of cocoa, and instead rolled over these contracts into the 2024-2025 season and only supplied 210,000 tons, leading to a loss of $840 million, not only to the farmers, the board itself, but also the country. And all these factors end up compounding. The national debt now stands at 721 billion cedis. And the president says on top of inheriting a dilapidated economy, he also inherited empty coffers. The sinking fund had 64,000 in the dollar account and 143 million in the CD account. Yet this is a country which over the next 4 years, its debt servicing cost is going to amount to 280 billion cedis. He also touched on bread and butter issues. Inflation at 23.8%, the currency depreciated 19%, and high unemployment amongst the youth. And he says that he's not one to complain about problems, just laying them out and then beginning to gradually finding solutions.
Yeah. You know, when Jen sat down with the president, it made some waves because he did tell her that he would want to perhaps reevaluate the terms of the IMF arrangement. There's a $3 billion outstanding IMF facility. What else did we learn about what he's planning to do to turn the economy around in the next 4 years?
Jumana, that IMF program is top of mind for him in terms of refining that project because it has very ambitious revenue projections and targets for Ghana, 24% of revenue to GDP by 2028. Yet currently you have tax to GDP at about 14% in 2022 and non-tax at 17%. So this is going to be an uphill battle. But some of the things that he's doing, he's trying to cut down on government, reducing the number of cabinet to 60. He's also appointed a new central bank governor. The goal here will be to manage inflation and also stabilize the currency and also set aside money in the sinking fund so they can honor their debt obligations. But what is important to remember is that Ghana is not the investor magnet that it was a while back. So wooing investors, repaying debt, all while being locked out of the capital market and managing double-digit inflation is not insurmountable, but it's going to be an uphill task.
Yeah. Andiro, thank you so much for the reporting. Bloomberg's Andiro Ganga in Kigali, Rwanda. Okay, let's switch over and talk about markets. It is a day of red. Well, mostly red. Look, things have turned around now for U.S. futures. We are now seen opening up in the green after a big pullback yesterday for Wall Street. A lot of negative on some of these tech stocks. The Nasdaq closed down 2.8% weaker yesterday. Nvidia pulling down the index. It closed down 8.5% weaker after those earnings numbers came through. Take a look at Euro Stoxx futures as well. Seen opening down 1.1% after yesterday's 1% declines too. But stick with us in the next hours. We stay across the risk-off mood in the markets, and we'll talk about why that is happening in just a few moments. I'm Rachana Mehta in Dubai, and this is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. The chips are down for Asian equities after a sell-off on Wall Street driven by Nvidia's underwhelming results. Sentiment being further sapped by Donald Trump's latest comments on tariffs. The U.S. president says 25% levies on Canada and Mexico will take effect next week, with Chinese imports hit by an extra 10% tariffs. And within the last few minutes, Beijing says it will take all necessary countermeasures. And just 2 days ahead of Phase 1 expiring, Egypt says Israel and Hamas have begun negotiations on the second phase of the Gaza ceasefire. Well, good morning, everybody. It's just gone 9 a.m. across the Emirates. I'm Rachana Mehta in Dubai. Welcome to the second hour of Horizons Middle East and Africa. And if you're just getting up to speed on how markets are trading, if you're just waking up, well, it has mostly been a risk-off session. The hangover from Asian equities pretty negative overnight. Investors really getting concerned about the impact of all of these tariff announcements out of President Trump this week. Yesterday, there were tariff talk about imposing them on the EU. We also spoke about Canada and Mexico. He's also flouting that they would come into action on March the 4th now, 25% tariffs on both Canada and Mexico, in addition to another 10% tariff on China. But just in the last couple of minutes, China have now responded saying that they hope, and this is a quote, the U.S. will not make this mistake again. China says it will take all necessary countermeasures. So it's not just about what the U.S. are saying, but how other countries are retaliating. And now we are getting hints from China that they will have to respond and will introduce their own countermeasures to the U.S. At some point. Unclear when that's going to happen. So yes, very much in the middle of a trade war, and that's affecting sentiment today. You can see Euro Stoxx futures also down 1.1%, building on from losses yesterday, down 1%. The tariff news there affecting. And then Asia Pacific, very weak, Hanover 2 down 2%. As for other assets, well, the rally in fixed income continues. We've got 10-year treasuries trading close to 4.22 now. We're another 4 basis points lower on the session, given the risk-off mentality. Euro also falling a little bit, down 0.1%. The tariff talk has given another bid to the USD. Bitcoin down 5%, more than 25% weaker from the most recent highs. So technically in bear correction And then gold also falling a little bit this morning, down 0.5%, of course, very close to those all-time highs. But let us talk more about what has been going on with the tariffs and the potential countermeasures, because it is affecting market sentiment. Let's get out to Mark Cranfield from Bloomberg's MLive. Mark, I just went through some of the comments we got in the last few minutes from China. They issued a statement, a thinly veiled threat at the U.S., essentially saying that they hope the U.S. will not make this mistake again, and that they are vowing necessary actions in response to these U.S. tariffs, very much in the midst of a trade war now, and it's clearly affecting people's sentiment towards markets.
Yeah, traders are watching China's response very carefully. Bloomberg Economics has a very good piece on it today, because this time around it could be a tougher response from China than we saw during the first Trump administration. So Bloomberg Economics are saying that as the tariffs were imposed when Trump was president before, the Chinese response was very measured, and they didn't match all of the levies one for one. In fact, they took a fairly steady approach to it. But of course, at that time, China's economy was much stronger. They were in a better position globally, and they were able to withstand it to some extent better. This time around, their economy is not so strong. They're trying to get it back to 5% growth. They're trying to impose their own kind of stimulus to repair the property market and other factors. They've also got the MPC coming up next week as well. So the timing from their point of view is extremely awkward. So it may well be that China brings a tougher response, and investors will clearly be watching that very closely, because if China matches the US one for one in terms of retaliation, as you say, that's likely to really look like a full-out trade war. That will have consequences for the yuan, for Chinese equities, probably will spin back into US markets as well. They will probably become under pressure as well. So really, how China responds is very important next week.
Yeah, 100%. But also, it's not just equity markets we're following. We're seeing a bid re-emerge for the USD, and the greenback had come under some selling pressure in the last couple of weeks. Could this mark a turnaround, do you think?
To an extent, yes. But the flip side of it is that as this chaos starts to spread across various asset classes, we're seeing crypto dragged into it as well. There's a very strong bid for US treasuries, and people are beginning to question whether or not this affects the outlook for the US economy. So that could get dragged down as well. Now that brings the Federal Reserve back into the picture, and traders are already betting that the Fed will have to lower interest rates by the middle of the year. That may come even further forward. So as expectations grow that the Federal Reserve needs to cut rates, that will weaken the US dollar again. So the upside for the US dollar looks pretty limited at the moment. It may do better against emerging market currencies. We've seen places in Asia like the Indonesian rupee is trading very weakly. But as far as the G10 is concerned, the dollar may not have much upside.
Makes sense. Mark, thank you so much for sharing your views. Mark Cranfield from Bloomberg's MLive. Well, let's talk more about what we learned on the tariffs. President Trump says 25% tariffs on Canada and Mexico are on track to take effect on March the 4th. For more, let's bring in News Desk editor Jill. Jill, so look, what day is it today? It's February the 28th. There's still a couple of days between now and March the 4th. No reprieve in sight, but of course, there's still a possibility of another extension similar to what we got last time.
Yes, there is, Jumana. I mean, I think that what we're looking at here is just that there's been a lot of confusion that's really come up over the timing of these tariffs, particularly these tariffs on Canada and Mexico. Of course, as you remember, it was just earlier this month, really. We were expecting these to maybe go into effect. We've had this extension. There's been some thought, some consideration within the Trump administration, kind of looking at the impacts of not just these tariffs, but other tariffs that have been going, that are expected to go into effect, whether that be more global retaliatory tariffs, whether that be other tariffs on China. It really does kind of present this picture of, the Trump administration obviously wants to go pretty fast and hard on implementing, these tariffs to sort of exact, demands from these countries. But, there's, again, just been like a little bit of that confusion. As of right now, what the Trump administration is really saying here is that they really haven't gotten fulsome response, at least what they were expecting from Canada and Mexico out of some of their concerns about the fentanyl trade, illegal immigration, migration, that kind of thing, border security. And so that's really what they're pushing back here with these tariffs. But yes, as of right now, saying that they're supposed to go into effect on March 4th. And that's also in addition to another 10% tariff on Chinese goods. So that's sort of 10% on top of an earlier 10% that Trump announced just about a month ago. So really, I mean, just ratcheting up all kinds of efforts here on these trade war fronts.
Yeah. Jill, thank you for keeping us up to speed. I'm sure there are going to be a lot of developments in the next couple of days and possibly over the weekend as well. News desk editor Jill Desis. Well, joining us to bring in the market perspective is Rachana Mehta, regional fixed income co-head at Maybank Asset Management. So let's just put on our fixed income hat here. At the beginning of the year, when people were talking about tariffs, everyone thought it was going to be inflationary and therefore a negative driver for fixed income. I don't know why, but the narrative has changed in the past week. What do you point that down to? Why all of a sudden are people worried about the growth impact of tariff as opposed to the inflationary impact of tariffs?
I think people are worried because initially people thought that the tariffs are not going to come into effect, and that's why people think the growth will be stronger. But now people are in two minds. Maybe tariff will come into picture, and I think that is one of the key reasons why investors are now thinking that, okay, short term it may be inflationary impact, but long term actually consumption is going to slow down in the US. And especially we have already seen some of the numbers coming out. These are already weak. And let's be honest, when there's so much of uncertainty, business don't want to spend. So that will actually indirectly impact consumer confidence. So short term, yes, inflationary impact will be there, but people are looking, okay, next 1 year, 1.5 years, definitely there's a slowdown in the growth. And that's why people are now focusing on growth rather than inflation.
Yeah, even though we do have an important inflation figure coming up today, we've got the PCE print. I would say that now perhaps the risk is to a slightly hotter number, given how much fixed income has rallied into the event. If we do get a hot inflation print, could that sort of cap how much further we could get in this fixed income rally?
Yeah, I actually, my personal view says it will be slightly higher than expected because if you look at over the last history, roughly about 60 to 70%, it's higher than expected. So I'm expecting a higher number. I do feel that there'll be a sell-off, there'll be a knee-jerk sell-off. But again, I think people will look at opportunities to actually start buying fixed income. So I do believe there'll be a 10 basis point move maybe today. And then actually, if it sells off, actually, I would like to add duration to the portfolio because eventually it's all about tariffs and short-term inflation impact, but it's just that I think if there are retaliatory tariffs, I do believe that people start to get the growth aspect more. So I do feel there'll be a sell-off, maybe 10 basis points, but maybe for people who missed it, it may be a good opportunity to add.
Yeah. Do you see 10-year treasuries breaking through 4%? What would need to happen for us to break 4%?
I know it's a tough call. I definitely think that by maybe end of this year, it may break 4%. Actually, there are a couple of reasons, because if you look at Dodge, what's happening in the US in terms of layoff, in terms of bringing down the debt. See, I think the long end is more about deficit, whereas short end is more about inflation. So for me personally, if really they can bring down the cost and actually if consumption demand slows and everything, I think people will start putting like flattening trade. So I prefer a long end of the curve than short end of the curve. So I do believe maybe in the second half, if the tariff impact is in full force and immigration also is an issue in the US, I think that there's a high chance that the 10-year treasury may drop below 4% in the second half of 2025.
Okay, interesting. So perhaps further flattening to go. I do want to bring in something else, though, and that is the fact that just before you and I started talking, we were talking, I mentioned the statement that China put out vis-a-vis potentially applying counter tariffs to the U.S. Why is Asian credit so resilient? Why are we not seeing more of an impact on some of these credit markets in Asia who also are indirectly exposed to the shots being fired between U.S. and China?
Yeah, if you look at the Asian credits, correct, most of the Chinese credits are held by Chinese players and they understand the companies and there are not many high yield credits out there. So actually, and the absolute level of yield is pretty good, correct? So whether you would buy your own country's credit or government bonds or buy U.S. treasuries, net-net, everything is linked to U.S. treasuries. So though actually the credit spreads may widen out, net-net, you'll still make money if treasury rallies. So I feel Asian credit has got a very, very strong bid. The spreads are all-time tight, but I do believe that people will continue to buy because actually maybe people want to move from equities to fixed income. So that may be another reason, given that a lot of money is lying in deposits in China and the rest of the world. Maybe people think, okay, there's a good time, especially if there's a chance that Fed may cut rates, I might as well start buying good quality IG credits now. So that is one of the key reasons that locals are buying their own credits, yes.
Yeah, what about Chinese bond yields? The theme for so much of the last 6 months was this continued march lower. But again, it feels like we've hit somewhat of a floor there as well. What's your outlook on where we go from here?
Yeah, I definitely think, for China, maybe the curve will steepen because China needs to spend more. We are waiting for the next week, the NPC meeting. And I do believe that they may increase fiscal stimulus and actually they may keep a budget because unemployment is the key in China. So if we've already seen some confidence returning in China in terms of the property market, domestic consumption. So maybe I think China is doing the right thing by focusing on the domestic market, and maybe there'll be much more handouts given to the domestic consumption and employment numbers so that the external factors are weak, but hopefully it will be negated by the domestic factors. So I definitely think that I expect actually a steeper curve in China and a flatter curve in the US given higher short-term inflationary impact in the US.
Yeah. Strong views. I love it. Rachana Mehta, Regional Fixed Income Co-Head at Maybank Asset Management. Really good to have you on. Thank you.
Thank you.
All right, coming up, a key Kurdish separatist group leader is calling on his militants to lay down arms and end their decades-long fight with the Turkish government. We have the latest next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Kurdish separatist group leader Abdullah Ocalan has called on his militants to lay down arms and work towards ending a 40-year war for autonomy against Turkey. Ocalan has been jailed since 1999, and while he no longer directs the day-to-day operations of the PKK, he is calling on the group to dissolve itself. So joining me now is Honor Ant, managing editor for the Middle East and North Africa. Honor, this really feels like a watershed moment in Turkey because the conflict with the Kurdish militant group has been going on for several decades now. And even though Ocalan doesn't directly run the day-to-day, it is quite significant because he's got a huge following amongst the Kurdish groups.
I believe so. It's, I think, a historic call by the jailed leader of PKK. As you said, whether or not it proves to be a historic period that follows this historic call is going to depend on how much sway Ocalan has on his groups. As you have pointed out, he was captured in Kenya, out of all the places, 25 years ago, while he was on the run from Turkish authorities, and he has been in a jail ever since. So there has never been an opportunity to test his influence on the PKK. You can call him a symbolic leader or a spiritual leader for the group, which right now, or has in the past 25 years, been run by another group of militants that are believed to be based in the Kandil Mountains in northern Iraq. So yes, it is historic. The fact that Öcalan made this call is a historic one, but whether or not it's going to result in actual disarmament of the PKK and whether or not it dissolves itself like Öcalan asked for remains to be seen.
How does a de-escalation of tensions with the PKK fit into President Erdogan's broader agenda, not just in Turkey, but for the region as a whole, with a particular eye on Syria?
So I think the answer of that question has two legs. One is the domestic agenda. Erdogan has repeatedly said that he does not want to seek another term. This is it for him, his political career. When it expires in 2028, he's not going to be seeking re-election. Well, he's not allowed to by the Turkish constitution. Whether or not he reaches a peace with the Kurdish militant group and its possible political implications domestically might allow him to rewrite the constitution and allow him to run again for office. So that's one thing. The other one is what happens in Syria and Iraq. Because if the PKK really disarms and dissolves itself, it will probably have an impact on other militant Kurdish groups in Syria, where Erdogan wants to influence, or wants to increase his influence, Turkey's influence. And that is going to be a function of whether or not the Kurdish militant groups in Syria remain active or not. And Öcalan's call will definitely have an impact on that.
Yeah.
We just don't know what that impact will be at this point.
Exactly. That's why I asked you the question about the broader vision for the region, not just specifically for Turkey. Honor, thank you very much. Really interesting perspective on the developments there. Honor Ant, Managing Editor for Middle East and North Africa. Now, coming up, President Trump sidesteps pressure to agree on security guarantees for Ukraine during a visit by UK Prime Minister Keir Starmer. Details from the pair's joint press conference next. This is Bloomberg.
We want a ceasefire. We want that this ceasefire be guaranteed by European countries with an American backup.
Certainly strengthening our defense effort in the course of the next years is something extremely important, because we do want to strengthen the European pillar of NATO.
Of course, what we know in Europe is that we have to strengthen our own defense capabilities. We have to reinforce the defense industry in Europe.
There's now an intense discussion underway regarding how we can further contribute to that defence and security.
We set out a clear plan for taking defence spending to 2.5% of GDP by 2027, and that will be funded by cuts in overseas development assistance. That is the right thing to do, given the threats we face from Russia.
G20 finance ministers discussing how European countries are going to react to the changing defense environment on the sidelines of the meeting in Cape Town, and speaking to our colleague Jennifer Zabazaja. Now, UK Prime Minister Keir Starmer has met with Donald Trump in his first face-to-face meeting with the US president since he returned to the White House. During a joint press conference, Trump expressed eagerness to conduct a trade deal, but Starmer fell short of his ultimate objective of winning US security guarantees for Ukraine. The meeting comes ahead of Ukrainian leader Volodymyr Zelensky's visit to the US later today. So let's bring in Greg Sullivan, Bloomberg's Russia economy and government editor. Well, it is a really big deal that Zelensky is actually making his own way to the White House later today. What is on the agenda for those discussions, with the view that, of course, President Trump met with Keir Starmer yesterday. UK Prime Minister was pushing for further security guarantees and didn't walk away with any further security guarantees from the US. So that's the setup going into the Zelensky meeting.
Well, that is the key issue as well. I mean, it did seem that the Starmer meeting with Trump went well by all accounts, but he did not walk away with a key goal that he sought, which was a backing for some sort of security guarantees for Ukraine. Now, Zelensky is traveling to Washington ostensibly with the same goal, which is what kind of security guarantee can be in place in any kind of truce. Trump has been very clear that he wants to find an end to the fighting very soon, but that's hard to see happening without some sort of security guarantee that deters Russia and that all parties at the table can accept.
Yeah, but it's not just about the security guarantee. Trump wants something else. He wants Ukrainian minerals. So how much is that mineral deal going to be a focus of discussion as well? There was a lot of back and forth this week about what they had exactly agreed to and how much of their critical minerals Ukraine are willing to give up.
Right. Trump, clearly this deal means a lot to Trump. He sent his Treasury Secretary to Kyiv to lay out an initial version of the deal. As you said, Kyiv has pushed back against parts of that deal, saying that it wasn't in their national interest. They pushed back on a $500 billion fund that was supposed to be sort of a repayment for U.S. support. But the fact that they do appear close and ready to sign such a deal could give Trump the image of a deal, of having achieved one of his goals, which could help him potentially argue for continued support for Ukraine should he choose to. So it could be kind of critical.
Yeah, I do wonder what form those security guarantees would come in, because he's ruled out sending peacekeepers to Ukraine, unlike the UK, and even France, I think, have posited the idea as well. Let me just ask you about European defence spending plans. The UK have now committed to increase defence spending. We're hearing talk of the EU doing it. How much is that going to go towards actually bolstering the protection of Ukraine and the continent in the future?
Well, I mean, Europe in general has really been rushing to sort of craft a response to Trump. Trump was critical of European defense spending in his first term, and now they're really trying to step up efforts to spend more on their own security in the wake of what looks like a U.S. pullback from that. But there's a huge gap between what the U.S. spends on defense and the U.S. industrial base and what Europe has. So they're going to have to really step up efforts, and it's hard to see them making that overcoming that gap in just 3 years or 5 years.
Yeah, also when so many of the budgets in Europe are under fiscal pressure. Greg, thank you so much. A great overview of what to expect today. Greg Sullivan, Bloomberg's Russia economy and government editor. And back to markets. So once again, a big sell-off for Wall Street yesterday, but today futures seem to be perking up. So S&P futures, Nasdaq futures leaning towards the green. Euro stocks, though, down 1.2%. Coming up, South Africa's President Cyril Ramaphosa wants to reach a broad-ranging agreement with the U.S. We'll be back. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. The chips are down for Asian equities after a sell-off on Wall Street driven by Nvidia's underwhelming results. Sentiment being further sapped by Donald Trump's latest comments on tariffs. The U.S. president says 25% levies on Canada and Mexico will take effect next week, with Chinese imports hit by an extra 10% tariffs. Beijing responding a short while ago, saying it will take all necessary countermeasures. And just 2 days ahead of Phase 1 expiring, Egypt says Israel and Hamas have begun negotiations on the second phase of the Gaza ceasefire. Good morning again, everybody. It's just gone 9:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. A risk-off session prevailing in Asian markets. A really negative handover from some of those key indices. The Nasdaq down the Nikkei down more than 3% in overnight. But you can see the U.S. futures are actually tilting towards the green now. We were trading substantially more negative a short while ago. S&P futures, Nasdaq futures, really recuperating some of the losses seen in yesterday's session. And of course, Nvidia was in focus. The stock ended down 8.5% yesterday in trading. Investors disappointed by the earnings that came through. So that really set the tone for some of the tech stocks. But of course, tariffs squarely in focus again. Let's flip the boards and let me just show you the reaction in U.S. Treasuries. We are rallying today, another 4 basis points lower. 4.22% is where we are at. So a long way away from where we were just a week ago, about 30 basis points lower. The euro also losing some ground on, again, the potential for tariffs on European goods alongside the bid that we're seeing for the USD this morning. Bitcoin down almost 6%, 25% lower from the most recent highs. And then gold also losing a bit of ground, down 0.5%. So quite a lot of red on the screen. Risk off is prevailing. Let's get out to Mark Cudmore from Bloomberg's MLive. Mark, it felt as though a couple of weeks ago markets had become somewhat complacent about some of these tariff risks and weren't taking Trump seriously. And now, of course, everything he says about tariffs, or everything he has said in the last 48 hours has had quite an outsized impact on market sentiment. Is that going to be the modes going forwards?
I think tariffs are getting closer to being reality. So I think, first of all, I very strongly believe tariffs will be coming. The communication from the Trump administration has been very clear, and they need the revenues for their plans. So there's no reason to think that all the tariff threats are just threats. Some of them will be implemented. We just don't know exactly which ones and which level. Now, when they will come is a little bit harder. I can see next week's ones being delayed again because they might congregate globally around that April date. But it does seem like Trump has doubled down yesterday that next week's deadline is kind of real. So we are getting closer to those tariffs. Yeah. And it is true the market was overly complacent about them. But this week we've had an outsized reaction because the market was already tender and sensitive and vulnerable to a change in narrative even before the tariffs threat got reiterated.
Yeah, because valuations are a lot higher. So let me just bring in another angle, which is Nvidia and the fact that the stock dropped almost 9% yesterday in trading. Is that actually a bigger driver in terms of what we're seeing in Asian equities today than all of the tariff news? Because it's actually the chip makers that are getting hit the most.
It's a big driver today. I'm not sure it's a bigger driver, and I don't want to associate it with just with Nvidia. I think generally there has been a realization since the DeepSeek news a month ago that, hey, the benefits of AI aren't going to accrue just to US mega cap tech stocks. And not only that, but in fact, many of the benefits are going to accrue to massively discounted Chinese and Hong Kong stocks. And so therefore, what we're suddenly seeing is TINA has been killed, the idea that there is no alternative to US mega cap tech stocks. And because that's the end of US exceptionalism. So we're unwinding the exorbitant premium that was in US tech stocks, and we're adding back more pricing into these stocks around the rest of the world that were overly discounted because they're perceived to not be benefiting from the productivity boom ahead of us. And that is particularly focused around Hong Kong stocks. In the short term, we're entering a bout of risk aversion, which means even indexes like Hong Kong that have been performing exceptionally well will likely continue to retrace from here in the next week or so. But overall, they have extremely strong fundamentals on their side for the year ahead. So even if they pull back 5-10%, they're still a long way up for the year, and they still will go a lot higher later on this year.
Yeah, let me ask you about fixed income. The rally no one saw coming. We've got a U.S. inflation number coming up today, the PCE, the Fed's preferred inflation gauge, as we like to call it. It feels as though, Mark, that the bar is a lot lower, perhaps for a hawkish surprise, given how much fixed income has rallied into today.
Maybe, in terms that the inflation problem hasn't gone away. If anything, in fact, prices are looking still quite perky. But what's happened is that people have realized that they're more concerned about the growth component. So I can see us getting a hot print today and getting a bounce in yields. But I don't think that we're going to see a sustained bounce in yields. People are getting severely worried about US growth, having been very, very optimistic on US growth only about a month ago. So the change in narrative is really about the growth side. The inflation threat hasn't gone away, but it hasn't changed. It's not kind of really particularly reinvigorated. So I think that whatever we see from the short-term data today, and I have no particular edge on where the data is going to print, I think that ultimately long in yields probably have a little bit further to go lower next week.
Yeah, interesting. It's really been a busy week for markets, and it looks like there's no signs of that abating anytime soon. Mark Cudmore from Bloomberg's MLive. Thank you so much. South Africa's President Cyril Ramaphosa wants to reach a broad-ranging agreement with the U.S. on diplomacy and trade amid strained ties between the two nations. I'm really happy to say that Cas Coovadia, Business Unity South Africa CEO, and the B20 Sherpa joins us right now. Really good to have you on the show with us. First thing I want to ask you is, look, this is the first time the B20 is actually being held on the African continent. What role does the B20 play in terms of setting the agenda for the broader G20?
Well, yes, as you say, it is the first time that it's on the African continent. And if I could just clarify, I'm not Busa CEO anymore. I'm just a B20 Sherpa. But having said that, I think that what's important is that South Africa is also the fourth consecutive country from the south after Indonesia, India, and Brazil that's hosting the B20. So we certainly see one of our responsibilities not just putting on the table the priorities of our country and the continent, but also the priorities of the global south. 6 of the 8 task forces that the B20 manages come from Brazil, and Brazil inherited them from India and Indonesia. We've adopted one of Brazil's task forces, food security and agriculture, and we've added a task force on industrial innovation, manufacturing, and beneficiation, which we believe is important for South Africa and the continent. And the B20 essentially, certainly in our view, is a body that brings together the global south and the global north, and is an opportunity to actually for critical countries in the world to sit down and develop policy recommendations to the G20 governments that hopefully will create and maintain an environment where businesses can grow inclusive economies, where people can prosper. And we can do that in a collaborative and cooperative world.
Yeah. Well, that's the goal, of course, but the U.S. president may have a different agenda. I know that you just had your inaugural meeting with some of the key business leaders. How much did Trump's policies come up, and the fact that he's also specifically targeting South Africa on some of those trade policies and the pullback on foreign aid?
Yeah, look, you know, our counterpart for the B20 South Africa in the U.S. is the American Chamber of Commerce in Washington, who was present at the launch of the B20 in Cape Town on Monday and Tuesday. They have assured us that American business is fully committed to the B20 and will participate in the B20. And some American business people were at the launch. We will let the politicians deal with the politics, but America caters for about 13% of global trade. The G20 countries and others cater for the rest, and our concentration is to ensure that 87% of global trade that still appears to believe in a multilateral system, open economies, that we promote that and we put into place recommendations to the G20 countries to enable multilateralism to thrive, to enable economies to grow and grow in an inclusive way that addresses some of the problems that not just the global South has, but even the global North has, and to ensure that we do all of that within the context of open economies and democratic societies. And that's our goal. That remains our goal. We're not going to get involved in politics, but if the politics push against recommendations that we make that are good for business, then in our recommendations, we will talk to that and we will alert G20 governments to the repercussions of certain political decisions that they may make.
Yeah. Does the fact that the G20 yesterday ended without a joint communique have any knock-on effects on what can be achieved out of the B20 as well?
No, we don't think so. As I said, we had the launch. The launch was very, very successful, very, very positive. People very excited and geared to actually start doing the work in the various task forces between now and August, September, when we aim to have the recommendations ready to pass to President Ramaphosa. So the work, it doesn't affect the work of the B20. I think that the G20 obviously has to deal with issues that have not enabled them to come out with a communique and need to do the best they can to ensure that the G20 is not adversely affected by the global politics at the moment. But it won't affect our work. Obviously, once we hand over recommendations to President Ramaphosa, and he then puts that into the G20 process before the G20 summit in November, at that point in time, that there might be an impact on the B20 depending on what the dynamics in the G20 are and their ability to actually consider those recommendations. And so we've given ourselves September and October as a period of advocacy, and we will advocate very strongly for our recommendations to be considered. And at that point in time, if we need to, as part of that advocacy, engage with some G20 countries, we will do so. Yeah, we'll do so.
Yeah. Very clear. Thank you so much for your time today. Cas Coovadia, B20
Thank
Sherpa.
you.
Thank you. And for more stories like this from the continent, be sure to subscribe to the Next Africa newsletter on the terminal and our website, and our podcast available on platforms like Apple and Spotify. And on a programming note, don't miss our monthly show, Next Africa, airing tonight. Our first episode of the year takes a deeper look into how President Trump's return is rattling the continent, hosted by none other than Jennifer Zabazaja. Now for a look at some of the other stories we're following today. Bloomberg has learned that Indian officials are exploring ways to lower tariffs on a wide range of imports in a bid to evade U.S. President Trump's threatened reciprocal levies. Officials in New Delhi are discussing cutting duties for cars, some agricultural products and chemicals, as well as certain medical devices and electronics. India is hoping such efforts will help close a trade deal with the U.S. by autumn. EU leaders are to call for increased flexibility in their funding rules to boost defense spending, responding to growing challenges posed by Russia and President Trump. Draft conclusions for a March 6th summit seen by Bloomberg show Commission President Ursula von der Leyen is expected to present a letter with funding options. Earlier this week, she called the situation a once-in-a-generation moment. And coming up, the UAE's Investopia conference has wrapped up for 2025. Bloomberg discusses what's new in private equity in the region. That interview is next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The annual Investopia conference hosted by the UAE has wrapped up for 2025. Rishi Kapoor from Investcorp and Brookfield's Jad Al-Aoun discussed what's new in private equity strategies and opportunities and risks. Take a listen.
We've been talking about investing in the region. Let's not forget, guys, that the region is a significant source of capital that is exported out for investment all over the rest of the world, right? In addition to the energy that is supplied to the rest of the world. And then last but not least, there are certain emerging sectors where the region is taking a true leadership position in, energy transition, for instance, being one. Even on the technology front, as it relates to the AI ecosystem in particular, but the broader technology services and technology goods landscape, you see the emergence of the region as a true hub of activity, right? So all of that means that there is, at this point in time, we feel very strongly that the region is positioned in pole position, right, to take advantage of some of this fragmentation that is happening on global trade and capital routes.
Jad, do you share that optimism?
Absolutely. And I was just thinking, actually, that it's incredible that we spent all this time talking about how much activity there is here, and we never even mentioned that capital was flowing out of the region. Yeah. Usually that would be the #1 topic that we would talk about, and I think that's only going to increase over time. I'll go back to what we were discussing earlier, which is if you are a global investor today looking for a home for your capital, and you have an opportunity to invest in a market that has emerging market growth, but in dollar-denominated currency, you're going to put your money there without the complexities of the geopolitics. And that's what the GCC is providing today. And we're seeing that en masse. We're seeing that at the institutional level. We're seeing that at the personal level. And so I share the optimism.
That was Investcorp's Vice Chairman and CIO, Rishi Kapoor, and Brookfield's Head of the Middle East, Jad Al-Aoun, speaking at Investopia. Now for a look at some of the other stories we're following. Bloomberg understands the U.S. Securities and Exchange Commission, the SEC, has expressed concerns over a much-anticipated private credit ETF. The regulator has asked State Street and Apollo for more information, expressing concerns over their fund's liquidity, its name, and its ability to comply with valuation rules. This after the ETF officially debuted on the NYSE on yesterday. Well, Dell has given a strong outlook for sales of artificial intelligence servers, though investors remain concerned about the profitability of the products. The U.S. company expects to ship $15 billion worth of AI servers over the next 12 months, a roughly 50% jump. Bloomberg understands that investors are pushing fintech Revolut to consider offering another secondary share sale. This as new investors look for ways to get a stake in the fast-growing London-based startup. Some shareholders have indicated they would sell at a valuation of $60 billion, significantly higher than the $45 billion price tag that Revolut garnered in a secondary share sale just 6 months ago. Tencent has released its Turbo AI model with a claim that it's faster than DeepSeek's chatbot. The AI service is designed to respond as fast as possible, and Tencent says the deployment cost of the model has also been reduced. The launch underscores the dramatically quickened pace of development since DeepSeek stunned Silicon Valley with its low-cost model a month ago. Meta is said to be in talks with Apollo for a $35 billion financing package to help develop data centers in the U.S. Sources say the alternative asset manager has discussed providing a major part of the financing. KKR is also understood to be part of the investor group. Meta has already spelled out plans to spend as much as $65 billion on projects tied to AI this year. And coming up, Ghana's new president, John Mahama, says the economy is worse off than he expected. More on the significant challenges facing the West African nation next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Ghana's new president says the economy is worse off than he expected after an initial assessment of state-owned agencies' debt. The country faces significant challenges, including surging inflation, poor job prospects, and crushing debt. For more, Bloomberg's Ndiro Ganga joins us now. Ndiro, what are some of the key areas the new president, John Mahama, highlighted to demonstrate the bad shape of the economy?
Hi, Giovanna. So the president began by saying that the economy is broken on all fronts, and he attributes this to high debt levels and also fiscal mismanagement. And he says that state-owned enterprises are knee and neck deep in debt. He starts with ECG that owes 68 billion cedis, rather. He also says Cocoa Board owes 32.5 billion cedis. And Cocoa Board failed to supply 333,000 tons of cocoa beans and instead opted to roll over these contracts into the 2024-2025 season, but only supplied 210,000 tons. And now they've costed the country $840 million. All these things compound. Ghana's public debt now stands at 721 billion cedis. And on top of inheriting a dilapidated economy, President Mahama says that he also inherited empty coffers. He says looking at the sinking fund, it had 64,000 in the dollar account and 143 million in the CD account. Yet debt servicing cost over the next 4 years is going to total to about 280 billion cedis, which makes it an uphill task for this administration. He also touched on bread and butter issues, inflation 23.8%, currency depreciation at 19%, and high unemployment, but says he's not one to complain, just laying out the problems and then beginning to find the solutions.
Yeah, and when he spoke to our colleague Jennifer a week ago, he mentioned that he would be looking to perhaps have some discussions with the IMF around the existing standing facility. And what other ways do we know about his thinking? What do we know about his thinking about how he's intending to solve some of the problems you just highlighted?
He's doing a couple of things, austerity measures, one of them being cutting the number of cabinet down to 60. He's appointed a new central bank manager so that they can manage inflation and also stabilize the currency. And he's going to set money aside into the sinking fund so the country can continue honoring its debt and bond obligations. But what's important to remember is that Ghana is no longer the investor magnet that it was a couple of years ago. So wooing back investors, paying its debt while locked out of the capital markets and also managing double-digit inflation is not insurmountable, but it's going to be a difficult task in just a span of 4 years.
Ndiro, thank you so much for the overview. Bloomberg's Ndiro Ganga in Kigali, Rwanda. Well, wrapping up what has been quite a busy week in terms of news flow, but also market price action. With a look at equity futures, S&P futures now leaning towards the green. I do want to point out, however, that S&P now is negative for the year. Year to date, the index is now down 0.3%. The Nasdaq, by the way, is down 3% for the year. So still a lot of red as far as those U.S. equities are concerned, tracking for the year, even though now sentiment is turning around. All eyes will be on that inflation print later today. Core PCE is a big focus, of course, for the Fed. But that was it for Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Stay with us for Daybreak Europe. That's coming next. This is Bloomberg.